And joining me in the studio today is a fantastic panel of experts. Senior journalist Shantanu Gohare, India representative with the Central European News, Professor Ravi Srivastava from the Jawaharlal Nehru University, Dr. Amir Ullah Khan, well-known economist and president with the Glocal University. Welcome to Insight. Shantanu, first of all, I would like to begin with you. Probably the biggest headline as far as today's business pages of the newspapers was concerned was Goldman Sachs downgrading of the Indian stock markets. Apart from the downgrading, it has also issued a bleak investment scenario, asking international investors to be a little wary of the investment climate in India. Your take at what could have prompted Goldman Sachs?
Well, I don't think it's just a headline in India. I mean, it's not the business papers. All papers have put it on the headline, besides other news. The investment scenario in the country for the last about 2 years or 3 years, I would say, has been fairly bleak. I mean, there is a peculiar scenario where it seems that investment is just not coming to India. And whatever little investment has come, it has slowly phased out. Contracts have not been able to sign because of multiple issues. If you look at those issues, the issues are equally valid. It shows that there has been some mad rush to try and drum up investment, both internally and externally, and all of them has met with unmitigated disaster. Goldman Sachs is perfectly on its point. The growth has been slow. From a high of June 10th, investment and industrial growth has come down to an abysmal low in June 2013. So you can make out that investment climate in this country is very, very poor. And there are Indian companies which are now openly investing abroad. If you notice, only yesterday's headlines said India's richest Indian, Mukesh Ambani, has decided, or maybe it was today, to invest 24,000 crores of rupees for shale gas abroad. And the same Mukesh Ambani's case is still pending before the government over a price rise over this KG gas basin, which was at one point of time declared as the best asset in worldwide in terms of oil and gas. I don't know where we are heading, but it is a bleak scenario. Goldman Sachs is perfectly justified, and they're also predicting that they could further downgrade, linking it to the rupee, which they fear it will eventually go up to 65. I don't think it's a big scenario at all. I'm sure Mr. Chidambaram is trying his level best to rein in the economy and try to bring in more investment by going out, NRI bonds and all of that, whatever he's doing, road shows. But I don't think actual investment has come in. I don't think FIIs have shown a lot of interest in India now. And that's a problem.
Professor Srivastava, a really frightening scenario that is being talked about as far as the headlines are concerned, and that is against the backdrop of the continuous slide in the value of the rupee, and that is that we are probably moving to a pre-1991 like situation in terms of balance of payments, for which necessitated the first push of reforms that we saw, and probably it is a long tendency of reforms that is pushing us to a similar situation that existed in 1991. Why are the government's efforts inadequate, the government's efforts that the government has been taking in the past 7 months or so, or are there no efforts at all, or are the efforts, do the efforts seem in the wrong direction to you as far as turnaround of the investment scenario in the country is concerned?
I think in terms of one single indicator, that is the ratio of current account deficit to GDP, that is really a worrying issue just now, because it's averaged about 4.8% over the last year. But I think the reserve position is still very different from what it was in 1991. So I don't think a comparison between 1991 and the present is warranted. That is undue pessimism. But on the other hand, there is a serious issue here of the current account deficit, and how exactly do we deal with the current account deficit. Of course, the current account deficit in the last quarter has been less than the previous quarter, and that trend needs to be sustained or improved upon. Gold imports have declined compared to the earlier period, but I think the systemic as well as the short-term factors, very little has been done to address them, because it was known. I mean, we have known for some time that the current account deficit has been very large. So some of the steps that needed to be taken earlier, which have been, there has been talk in the last few days in the FM statement and in the Chief Economic Advisor statement that they will be taking certain measures to address the current account deficit. these are steps which should have been taken 6 months or a year ago. I don't see why we were waiting for so long to take steps to address this situation.
All right.
But I think more serious steps need to be taken to address the issue of exports. You know, there is a situation where you have, but let's look at specific areas where our main competitors are doing much better than us. There is a situation when the rupee is depreciating and the Chinese yuan is actually appreciating with something like, let's say, in the garment sector with 40% of the international market. Now, why is it that India has not been able to maintain or improve upon its export performance in areas where it should be doing much better with the depreciation of the rupee?
Right.
So, why is it that proactively we have not been able to sustain or improve upon our export performance, which is currently negative? So, I think on this current account, the CAD front, a lot more needed to be done, needs to be done.
All right.
But I don't think the situation is comparable to 1991.
All right. Also, your take on Goldman Sachs downgrade?
I mean, as Shantanu pointed out, the situation is one which causes concern, particularly as far as the stock market. The stock market behavior has been very poor, has been very low, and has been very erratic, you know, very over the last few years. And there are real, you know, the real signs in the economy are one which should nearly, you know, cause concern to Goldman Sachs. But I do need to point out that there are two sets of issues. One is the growth rate issue. Now, growth rate, if you look by international comparisons, it is not that, you know, we are doing worse than China, but we are still doing a lot better than many other emerging economies, the BRICS economies, the developed economies, and so on. It is the structural reasons, the structural factors, the decline in investment rate, more importantly, the decline in savings rates, the CAD, and so on. This is something which we really need to worry about.
All right. Amir, is the rupee our biggest concern as of now?
Charu, not at all. I mean, you know, I will take off from something that Ravi mentioned, and that is that this is the first time really in the last 60 years that we are allowing our exporters some sort of a sustained lowered rupee value. You know, we've never done that. Our poor exporters have always had to battle an artificially high rupee from the days when the rupee was $1. And, you know, in 1947, 1 rupee was $1. Then it got to 7 rupees, 13, 20, when the market rate was twice or thrice, so the real rate was much higher. So the poor exporter never could compete. It is only now that she is finding that there is a good value to the dollar. So therefore, to my mind, and that's a great point that Ravi makes, that that it's the exports that have to grow, and we have to be clear that okay, if the rupee is weak, it does help the exporter. The exporter has been the worse off in this scenario ever since. The importers have made merry. So let's give them that era where they will consolidate and do better and have a good fair chance of competing with China, which has forever kept its currency low.
Devalued.
So that's the rupee story. As to what the real effective rate is, whether it's 55 or 65 or 85, it's a very difficult calculation to make, and it'll be quite futile to make any kind of a forecast as to where it is going. We might suddenly find that because Goldman Sachs has said 65, it'll go to 55 very soon.
Okay.
So it could go any which way. But the real issue, Charu, that I wanted to point out, and the broader issue, is that, you know, what I find disturbing is that there is so much emphasis on what the government should do. Right? Remember those heady days of 9.3 and 9.4 growth? Right? The entire private sector said, you know, it's us. It's the private sector in India that's leading growth. We are doing so well. Right? And the government is incidental. The government is irrelevant. Today, when it's 5, they say that it's a government that has to do something. We are standing on the sidelines.
All right.
So I am saying that neither giving credit to the government nor giving it so much of brickbats makes any sense in an economy that is quite liberalized. Yeah, sure, there are some FDI limitations that are foolish, there are some bottlenecks that happen, but those have been there. So to suddenly say that the last 3 years has been because of the government, and the most important point that I want to make is, if you look at the current account deficit, where does it start? If you ask people, they will say it all starts in the budget of 2008, when what the finance minister does is suddenly increases public expenditure by 3.5%. Now, when the economy is growing at 9%,
Yeah.
if we are going to spend 3.5% on some inclusion programs, is that really something we should complain about and say that is why the current account deficit is so high, and therefore scrap things like the food security bill? That seems to be the current trend, and every one of us seems to be getting blown by that.
Right.
That here is an irresponsible government. It's spending too much on public services. It is spending too much on giving food to the poor, and therefore growth is not happening.
All right.
On the other hand, they argue saying, no, they are not doing enough for poverty. I don't understand this. There is just too much of politics in the economy right now.
Too much of politics in the economy. Well, that has always been the problem. That has always been the feature, given the fact that it's a political economy, essentially. On that note, we're slipping into a very short break. When we come back, we'll go a little deeper into trying to find out as to the challenges galore that seem to be facing the government as far as the economy is concerned. What exactly do they break down to, and what could be the solutions? All of that on the other side of the short break. Stay tuned to the side. Welcome back. You're watching Insight, and today we are talking about the state of the economy. Shantanu, do you agree with broadly what Amir was saying, that it is not just the government alone that should be held accountable for this bleak investments climate as far as the economy is concerned right now?
I do agree to at least a point what Amir has said. I have some very basic points to argue my case here.
Yeah.
I'm not a votary of the private sector to say that private sector has done all the good things in this country and the government hasn't done anything. The private sector has always taken its pound of flesh wherever it is required. In the recent case of Uttarakhand floods, if you notice, the violations being done by groups like the JP group, which has not been reflected anywhere in the media, is so high and so blatant that is where the problem starts. That is where a perfectly legitimate project slowly starts eroding into your system and eventually causes a larger catastrophic problem. Okay, so let's come to the other point. But I think India has suffered in the last 10 years. The growth has been very slow. It is the slowest growth of the country in the decade. There are two factors I'm a little worried of. One is I see a declining consumer confidence. And this declining consumer confidence somewhat worries me, and it is across the board. It is not just that I'm a little worried. It is across the board. A public sector employee is worried. A private sector employee is worried. Jobs are not happening. That is a matter of worry. They feel that there is some kind of a policy paralysis in terms of the government. They feel certain decisions, certain signals were not taken at the right time. Many of the issues, including the GST, has got stuck because there are multiple layers and layers of argument people have to do. I think a collective parliament, if it works, it would have been better, but a series of scams have caused so much of damage to the entire parliamentary system that nobody could debate growth. They only debated scandals. And somewhere was lost this huge issue of foreign FII outflows, which has been, till June, they have taken out almost $7 billion. Which was almost the entire money that has come in since last year. So you realize that people are watching us and they're somewhat not keen to invest in the country. The government is making moves, but the government has to make solid moves, and they should say, okay, the contract is done, sealed, and now investment can happen. So it has not been happening.
Your basic point still remains to be the fact that the biggest problem is that things are stuck. Things are not moving.
Not only stuck, things are in kind of a limbo. I mean, it was about to happen, yet to happen, but it has not happened.
All right. Professor Srivastava, things are stuck. That seems to be the bigger problem. Do you agree?
Honest, I have a very different view of this. Perhaps because I sit on the side and look at, unlike Shantanu who's looking at things on a daily and an hourly basis. I don't think we are, what are we comparing our current performance to? Most of us compare our
we are comparing ourselves to ourselves.
No, but we are comparing our current performance to our performance between 2002-03 and 2007-08.
Right.
This is when we achieved an enormously high growth rate.
9%, near 10% digit growth.
Savings rate of close to 37%.
Right.
Very high investment rates.
Right.
So one needs to understand whether what we achieved between 2002, 3 and 7, 8 is replicable in some way. For that, you have to understand the nature of the international economy, the international growth, the high amount of financial liquidity which was available during that period, the low cost of investment. What we had was a profit-driven, very high investment rate in that period, thanks to the international boom, very low cost of investment through all possible conceivable channels, and the fact that Indian industry then actually over-invested in capacity.
All right.
So what you now have, there are two things. One, the government then, the government tried to revive the economy, and there was a high level of expenditure, 2009, 8, 9, 9, 10, and we have the impact of that, the overhang of that. But on the private sector front, we also have excess capacity which was created in. The cost of financing has now gone up. It has not only gone up domestically, it has gone up internationally. The international economy is now growing at half the rate that it was growing between 2002-3 and 2007-8. The developed economies are growing at less than half the rate currently. So the situation is now very, very different from what it was. And in my view, after the bubble burst, there is no way we can actually replicate, the world economy can replicate what happened during that period. So first of all, I think it was wrong then for the policy makers and those who wrote about it to think about 10 double-digit growth rates.
All right.
I think that was a delusion. That was a serious delusion.
All right.
We have to think of sustainable growth rates in the current decade, probably around 6 to 7%, and see then how we can actually, with improved infrastructure, improved social structure, build higher growth rates from thereupon.
All right.
So I think that if you start from that perspective, you look at our tax rates, you look at our expenditure, you look at the structural distortions in the economy, then you achieve a different perspective. Otherwise, we are comparing our performance, and I don't know what we are comparing our performance to.
Right.
Because what we are comparing our performance to is no longer replicable. The same kind of foreign capital flows will not happen now as happened then. Okay, in 2000, 2000.
How does the CAD problem figure in that narrative?
It figures for obvious reasons. It figures because we went into because of the liquidity overhang in the economy. The rates of inflation have been extraordinarily high over the last 5 years. This itself has put pressure on exporters and everybody else, because as you know, if rates of inflation are high, then domestic demand, there's a diversion of capacity towards domestic demand and manufacturers towards domestic demand. Internationally, the cost of petroleum, of course, is a different thing, but the growth in exports has halved, not only for us, but for everybody else. So these are issues playing up, but there is policy space. The issue is that if you understand the constraints domestically and internationally, then we have to look at policy space. And I would stand between Shantanu and Amir and say that, it's not a question of public sector or private sector. It's true that the private sector wanted to take all the credit then and wants to give all the discredit to government now.
Right.
But I think that's not the issue. I think there are constraints which were on the public private sector which are much more operable now than which were operable then. And we have to look at the space there is for public policy.
All right.
And as Amir is again absolutely right. You cannot say that you cannot divorce the two aspects of public policy. One is to enhance efficiency and growth. The other is to cater to the poor. To cater for public provisioning of goods in a country of India's size and India's diversity, inequality, poverty. Both are extremely important. It is extremely, I think it's extremely, strange for me to see, the papers and economists trying to pit one against the other. It cannot be one against the other. Public policy has to cater to both.
All right. I would like to come back to the assessment that you were making in the first segment, that government should not be held entirely responsible for all the things that are bad with the economy right now. what are you holding the private sector accountable for? In the fact that you said that it was claiming credit for all the good things that were happening to the economy, then what are the things that the private sector, that you would like to point out the private sector?
No, I'm just saying that the private sector seems to be putting all the problems on a few issues of slowdown, calling it whatever, policy paralysis.
So what is it that the private sector is not recognizing? Is it international pressures that the private sector is not recognizing, or is it its own some shortcomings that the private sector is not recognizing? What is it?
Some of it is what Ravi already said. Some of it is sheer overestimation of demand. Just their Excel sheets which were badly made. You know, and it happens in those heady days. You make projections which are unrealistic. You have some smart young fellow who says we will grow at 75% for the next 5 years, and you're very happy with him, and spend that kind of money. It happens to the best of the people. But the thing is that then you can't blame somebody else for it. And that's one of the things that's happened. The other is that there is very high cost of capital, and in those heady days, people took very high costs of and therefore they are regretting that now. It happened in the real estate sector, happened in manufacturing, everywhere. What happened, and this is the Economist this week has a very nice treatise on that, is that the decade that went by was clearly a BRICS decade. Right? So when we start off this decade, we have India, China, Brazil, Russia in that order growing at these blistering paces. Now you have China down from 14 to 7, India from 9 to 5. And Brazil and Russia are at 2% over.
5 to 6 to 2.5 or so.
So almost each one of them halving their thing, or even going down to a third. So the analysis, yes, that was the decade of those 4 emerging economies. Again, thanks to Goldman Sachs being called BRICS economies. And is the next decade the decade of Bangladesh, Indonesia, Turkey, etc., etc. Right?
All right.
So that's where, and so what will happen is that our private sector, which earlier used to never invest, started investing in India when it saw that it was growing at a fast clip. Now starts investing in Bangladesh and Indonesia and Turkey because they are growing at a fast clip. Fair enough, that's what private sector should be doing, but they should not, as I said again, be blaming a government for what they are doing. They are going to where they will do their best and most efficiently. That is how it should be, and that's what is happening right now. The simple point I want to make is that when we talk about growth, there are a lot of these external factors that are very critical. And the external factors are that the US, Europe and Japan are in bad shape. And unless something happens there, it's very difficult to get back to those old rates of growth. So has India reached its potential? Is India's story of 9% growth rate dead? Now are we consigned to 6 and 7? And Ravi seems to think so. I don't think so. I mean, I don't think so, meaning I'm not just guessing it, but the fundamentals are still strong, and therefore to come back to a 8-9% growth rate, though very ambitious, very difficult, should be possible. Right? But it is largely predicated on what's happening in the rest of the world. If our export sector grows, you see, one of the things that's happened is that our share in world trade has exponentially increased from that time that you talk about, 1991, where we were close to 0, to about 1.8% or wherever we are, is a pretty huge increase. From that $1.5 billion to $287 billion of reserves is pretty high. So it is possible to go back there. We might not go back to 9 and 10, but India still hasn't reached its potential, unlike a China, which has, and which cannot go back to where it was earlier. So India still has, and there are some serious bottlenecks, and those serious bottlenecks are, skilling, the things that we've talked about so many times, the whole regulatory system in agriculture, the entire problem in labor laws and so on. Those issues we never talk about.
All right. Shantanu, I'll come to you. Okay. I have to slip into a break right now. Sure. So the fact coming right now on the argument that is there on the panel right now is that it was unrealistic to expect that the cycle of growth and the boom that we had seen in the period between 2003-4 to 2007-8, it was unrealistic that it would be replicated, and it is probably those unrealistic comparisons that are making us feel that the investment climate is gloomy now and that growth has come down. But the fact remains, some things that Shantanu mentioned, I would like, on the other side of this break, I'll be talking about the programs that have been stuck, the programs that have collectively been called the reforms, the second era of reforms, GST, DTC, and apart from also the fact that inflation, especially CPI inflation, which has continued to be stubborn, that is believed to be pinching the pockets of the common man much more than anything else, much more than any other problem in the economy. What about that? On the other side of this short break, stay tuned to Inside. Welcome back. You're watching Inside, and today we're talking about the state of the Indian economy. Shantanu, you wanted to come in on the other side of the break.
Let me at the outset say that my point is what Amir concluded by saying that the issue of bottlenecks. In the last couple of years, that has been the single most concern of the country.
Yeah.
It is not an issue of whether companies are not investing in India, companies are withdrawing their money, Indian companies are trying to go abroad. It's a question of a bottleneck. Why there should be a bottleneck?
Yeah.
And nobody is blaming the government, but has the private sector sat down with the government and analyzed why POSCO's investment is stuck? The answer is no. If in Lanjigarh, if in those places, if the tribals are saying, no, you cannot mine, is there an alternate the government can offer to Vedanta? The answer is no. Why? That answer is what I call, in my opinion, in journalistic opinion, is a bottleneck. Then I should not tell Vedanta to come and invest here. The world's one of the biggest steel guy is Lakshmi Mittal. If investment has not come here, if he's unjustifiably demanding a lot of things, the government should be upfront and tell him on his face, you cannot expect this, you cannot expect the entire Chiria mine which you want in Jharkhand, you should rather have this much. Otherwise, this will not work.
All right.
The government has to say that. If the DTC is stuck, I will look at the government only, because tax is the propriety of the government. Private companies don't tax that way, you know. The land acquisition bill needs to be dissolved. The mines and mineral bill needs to be dissolved. If you take those quick decisions, bringing every partner of progress on a table and discuss this, and that's where public policy can be debated. But unfortunately, that debate has never taken place. We are lost in this, and we continue to get lost, and all projects are slowly getting stuck. If the government has cleared Walmart, and then suddenly it has left it to the states to implement it, the answer is it will get stuck, because there is a larger section of people which feels that those kind of big retailers will eventually eat up the small retailers. So that story also has to be listened before the retail story can go forward. So that is my main bone of contention. If Indian companies are violating rules, companies needs to be given global understanding, and they need to be told that internationally, when you go and invest, look at the way your investments have been handled. You are made, if you are cutting a forest, you are made to build that forest in an adjacent zone. Otherwise, your investment doesn't work. In this country, I'm cutting through a forest, even laying cables also, as if there is no tomorrow, then tweaking rules and trying and telling the court that there is a law that allows me to put the cable through because there is human habitat in the forest. And for their benefit, I've done it. If that is the case, then Corbett National Park would have electricity 10 years ago. It still doesn't have.
Professor Srivastava, I think Shantanu seems to be re-emphasizing the point that he was earlier trying to make, that growth is relative, of course. So the key problem is not that the growth has slowed down. The key problem is that things are stuck. All the broad areas which are collectively called the reforms that are stuck, that Shantanu talked about. There's investment, private industrialists who had been waiting for big ticket projects. Those projects have not kicked off. On a lot of infrastructure fronts, in the highway sector, in the road sector, there has been no progress. Then the various legislative big ticket items on the agenda, like the DTC, like the GST, like land acquisition reforms, changing the 1894 Act, so many things so many things that had made so many people positive about the Indian economy about 4-5 years back. None of that has taken off, and that essentially is the problem. Things are stuck. Things which, if started rolling, would have helped the economy in a much more bigger way, probably in achieving growth and probably in also making that growth inclusive. Is that the key problem?
Well, I'll begin with your last statement first. The question of growth being inclusive enough. We talk constantly about growth rates. Our debates are so growth centric that I'm quite tired of it. why don't we talk about an era or a decade when the real incomes of the bottom 50 to 70% of the Indian population rise by not by 10%, but by 5% a year consistently. Okay, because that has never happened, right? You've had a period of high growth and very high, rapidly rising inequalities. Let me remind you that, but at the same time, we are concerned about growth. We are concerned about whether there is space for growth, and he suggested there is, and I completely agree with both of them. There is space for growth. I completely agree with the fact that policy needs to look at how to exploit the current space for growth and how to create additional space for growth.
Right.
Okay. Now, how will that be done? There may be issues, and I think there are a lot of issues on how you interpret reforms. What do you mean by second generation reforms? In my view, one of the issues in the second generation reforms is to reform the first generation reforms.
Right.
Look at how the regulatory institutions that were created by the first generation reforms, how they are working,
All right.
what kind of a mess they have created.
For example?
Well, I mean, whether it is the regulatory institutions in the field of finance, whether it is regulatory instruments in the area of telecom, of energy pricing, and so on and so forth. Okay, their record has not been enviable in any sense of the word. The government has now tried to coordinate the regulators with very, very little success. And half the problem today is being caused by the way the new regulators, not just the old regulators that have been created. So I'm saying there can be a whole new debate on where reforms need to be. And I think very often we cite, things and areas of reform which actually are to my mind are not constraints on the ground. To my mind, labor reforms are not constraints on the ground. Real wages today in most sectors of the economy, construction, with the booming sector of the economy, the real wages paid to laborers in the organized construction sector today are lower than that paid in the unorganized construction sector when you and I get a house constructed.
All right.
Okay, so let's not, we must have a very serious debate on how to exploit the policy space. In the medium term, it has to do with creating social structure, appropriate physical infrastructure. We just don't have the kind of social and physical infrastructure with which we can sustain 9 to 10% growth rate.
So where are we going wrong exactly?
So I think in the last 4 or 5 years there has been. I think everybody has talked about it. The problem is that the government just doesn't have the wherewithal because of the scams, because of the exposure of the scams, because of various kind of things. The movement on various policy fronts, whether it's energy pricing, whether it is coal, is a huge thing. Coal is a huge thing because it affects energy generation, it affects our import bill and so on, and the fact that we are stuck on coal. So there are various areas where we are actually stuck, where we needed to move much faster, and Shantanu is absolutely right about that. Okay, so in the short term, I think there is a lot of space for policies to make an impact on short-term growth. In the long-term growth, again, there is a lot of space. But where this space needs to be created and how, I think, is a genuine area where we need, when we need focused debate.
All right, Amir. One point that I mentioned, we haven't yet come to that, and that is inflation. That is one area that continues to be a real baffling challenge for the policymakers, for the IBI on one front, and I don't know how much for other arms of the government as far as addressing the supply side constraints that we've always been talking about. CPI continues to be high, and I believe in June we also saw a marginal upward trend in WPI, which had been on the negative trend for quite some time, giving us comfortable space as far as the policy front is concerned. But now even WPI showed a upward trend. What is the inflation challenge?
That's the real serious issue right now. And what is interesting there, interesting as an economist, but otherwise very disturbing, is the food price inflation. That's the inflation that really hurts a lot of people. And if you see, the governor talks about it even yesterday. This is the best rainfall we've had for the last 13 years. Right? Since 2001, this has been the best rainfall. Vegetable prices should have dropped. There is no reason they couldn't have dropped. And that has reversed. They have gone up. There's something inexplicable there. And that's the real issue, that even when those external factors are good, we are seeing that food price inflation is still sticky. Again, I'm really looking at it from, from 2 steps back and 10,000 feet up, and I see that it's a problem that Brazil is facing, it's a problem that Russia, all the emerging economies, sticky inflation everywhere. And it has a lot to do with the whole growth cycle and so on. So some of it is built in and is necessarily mathematical. But here, because of all these factors, the food price inflation continues to be high. The reason food price inflation continues to be high, despite the fact that we have very good rains and therefore automatically higher output, is because there we still are the worst regulated sector in the world. And we've done nothing. Whenever we talk about reforms, and that's my constant worry about the debate that happens in India, that the debate that happens in India is about large manufacturing sector, about the IT sector complaining that this has not been happening, this is not being given, that is not being given, and that we will, environmental clearances are causing problems. And what Shantanu says is right. If you disturb the environment anywhere else in the world, you are just thrown out. And here you want to do it, and you then complain that it's not being given. But you take a look at the entire food chain and so on. We've been speaking since, at least I have been speaking about it for the last 20 years. Nothing has changed on that issue. We still don't have cold chains. We still don't allow transportation. We still don't give farmers the price discovery that they want. So food inflation will be high. And why food inflation is critical in the policy debate is because the moment inflation stays high, the RBI puts its fist down, finance ministry cannot do anything more, liquidity will be a problem, current account deficit will have an impact, people will get worried, and therefore there will be a lot of this paralysis that we see. So unless we do those fundamental changes, which for some reason we've been shying away from, agriculture, land, food, that haven't happened in 91, haven't happened in 2013, and if you see the statistics this time, if you see this Lok Sabha, it has never met. So if you ask me why tax codes don't change, why land acquisition act doesn't, it's all there. There are drafts lying there. But the parliament never meets.
Interestingly, parliament begins its session on Monday, 5th of August. It remains to be seen what kind of progress will be seen on the various legislative agenda that have been pending for quite some time. Now we're slipping into yet another break. The debate on inflation will continue on the other side. Stay tuned to Inside. Welcome back. You're watching Inside, and today we are talking about the state of the Indian economy. Shantanu, on inflation, given the fact that the rainfall that we are looking at this year, do you see any positive improvement on the inflation front?
It's a very difficult question to answer. It all depends on how the economy, shapes to some extent. Number one, I have a feeling that the economy is bottoming out. Our economy is actually bottoming out. And why this is bottoming out? Because now we have an election in front, and in terms of growth also, in terms of decision also, I see a peculiar rush on the point of the government. They're trying to do as much they can over the next couple of months so that things look very bright. But I have a feeling that things may not look bright, and I'm not being very pessimistic. I think we are just rushing into things which we should have done over a period of time. And this will all eventually impact the inflation and the way the nation is seeing its growth rates in the months to come. Why? I believe that the government is now slowly announcing a series of projects, a series of new measures. Certain bottlenecks which were there in earlier policy, including retail, they're all trying to remove that. Sincerely hoping that over the next 5 months, things will change. But here I agree with Amir. I really doubt that will change. You are trying to push in the miners bill, but one of the most difficult clause there is the issue of that you are asking the miner to share 26% of his profits with the local people. He will definitely throw a spanner in the wheel. And that will get stuck, and then again that debate starts. India actually, to take a look at this current account deficit and other issues, I think I have three basic issues if the government or somebody can seriously take a look at. We need to have a better infrastructure in place, definitely. The movement of vehicles, the movement of vegetables, fruits, as Amir rightly said, we had a bumper crop.
Yeah.
Yet you see the price going just through the roof.
Yeah.
Some of the vegetables are costing us 120 rupees a kilo in a country where even onions have actually led to the fall of governments.
Yeah.
So obviously people have to be sensitive. Why it is happening? It is just the middleman who enjoys. He knows that still the infrastructure is not in place for the farmer's product to reach from the farm and the folk that who has not got connected.
Yeah.
So that one, and there has to be an end to this corruption. Multiple issues we discuss, multiple points we debate, but somewhere it comes down and puts a huge pressure on the economy because we do not take correct decisions. Look at the NPAs. Look at the way the government has said new banking license will be given and the banks should open their branches in the rural area. I can guarantee you nobody will open. Because nobody is keen to put money where there is less growth. They will all try and open branches in Delhi, Mumbai, Chennai, Bangalore, Hyderabad, and stuff, cities like that. And finally, the bureaucracy needs to be completely in sync with the government. Multiple issues we are seeing, senior bureaucrats are at loggerheads with their ministers over various issues. And the biggest example is the slugfest is going on between the RBI governor and the finance minister himself. And they don't see eye to eye on many issues. So I think, as I'll come back to that point, that an inflationary tendency in the country depends on a number of factors. We haven't solved those factors. I would sincerely wish somebody solves it, but my only fear is we are heading for an election year. How much the government can do, I really have my doubts.
All right. Professor Srivastava, do you see any positive movement on inflation?
Unfortunately, no. As been pointed out, this whole story of, the cost of living rising so rapidly, this has been there for 5 years. Now, whether it will recede in the near future, I immediately see signs of this. And this has very serious repercussions on the macro, framework in the macro economy as well. But I think on the food economy, let me just say that what we are seeing now is a result of the kind of structural changes that have been taking place. Rapid rise in urbanization, the most rapid decline in net sown area in the last decade, than there has been ever before. Rise in diversion of area, diversion is probably not the right word, but increase in area under non-food grains in the limited agricultural area that we have, so that the area available for fruits and vegetables and food grains and cereals has gone down fairly dramatically. And the demand for these things has gone up because of rising urbanization, a slow increase in real incomes, and so on and so forth. So there are 2 or 3 things which just are dying to be done. We have to get more per unit area. Productivity has to rise. We have to take agriculture very seriously. We have to reduce the distance between the consumer and the producer. And the way to do this is not only large retail. The way to do it is also to encourage local markets. I don't know whether you have been to a weekly market anywhere in the country over the last 3 to 5 years. They're drawing far more people from the relevant sections of the population, the poor and the lower middle class, than they ever did before. Because this is where the growers gain and the consumers gain. But at the same time, realizing that, food grain and vegetables do have to be transported over long distances. You have to take care of the cold chain, the distribution network in a way that the value addition can be retained by the farmers. The incentives can be retained by the farmers. So now the debate really has to shift. Unfortunately, I have a different view on this. It has to shift from large retail on how can value addition be retained by the Indian farmers who are going to grow cereals and vegetables and feed the growing population which has to buy them.
Yeah.
So these are the kind of issues, and I don't see these issues being seriously debated either in policy circles or outside the policy circles. That is why I think we will live with some of these imbalances for some time to come.
All right. Amir, almost time for me to wind up. So keeping in mind the present indicators available, what seems to be your prediction for the near future, for the short term? One, obviously we see the growth forecast having been recently brought down. Then the investment climate also, the ratings by global agencies also coming down. The rainfall, as far as the domestic economy is concerned, you're saying that of course we've seen good rainfall as far as average rainfall across the country is concerned, but several areas are on the borderline of drought or of a drought-like situation in Bihar, in Maharashtra. So given all of these factors and probably any more that you can see, what does the outlook for the short term look like to you?
Talu, that's one question that I always skip, as to say what is going to happen in the future. Most of us economists are very big experts on what's happening.
Just a trend. I'm not asking anybody to do any crystal ball gazing. Just a trend.
I was just saying that we sound very confident when we talk about the last quarter. The future quarter, we don't know. I mean, given the trends and the fact that that some things are happening right now, and it looks like several parties are coming together. One of the interesting things about Indian democracy or Indian parliament is that suddenly everybody who's opposed on just about everything like the GST or whatever is together on the RTI. No, we will not be answerable, and they are together, and there's no distinguishing them. Yeah. So hopefully they will come together on mining, on land rights, and this and Telangana and whatever, and pass these bills. That's another RTI, Telangana. Suddenly they come together. Hopefully they will come together on some of the things that we've been discussing. And given the fact that if you take one of the things that is often ignored is that if you take the planning commission and the planning machinery. It has achieved some things very quietly. Like what it did achieve in the last 10 years was because of very heavy investment in education and freeing up of entry into education for the private sector, etc. The last decade has really seen a very huge increase in enrollments all through the space.
Actually,
if we can do that,
its own targets.
And if we can do that for health in the next 10 years, I will be very happy.
All right. Well, my friend, that's all I have time for in this discussion. Shantanu Guhare, Professor Ravi Srivastava, Dr. Amir Ullah Khan, thank you so much for your time.
Thank you.
That's all we have for you in this edition of Insights. Thank you so much for watching us, and do stay tuned to Lok Sabha Television for more. Namaskar.